Welcome everybody participating in today's webinar, another presentation by MG Academy. Today's topic is fairly niche, fairly specialised, and that's about tax debt. And we've got Olga Koskie from Tax Assure to help us with that discussion today. But look, there's a lot of challenges out there at the moment for small businesses, small business owners, or business in general. And I'll just go through a couple of those things before we go over to this panel discussion. And first thing everybody has to consider is that state and federal government financial support effectively ends at the end of this month. We have questions about what the future of work looks like. We have issues that we will have to address in relation to mental health of employers and employees. The question is working from home here to stay? Another very pointy question at the moment is, as an employer, can I mandate an employee to be vaccinated? There's also emerging trends especially in the US, where tens of millions of people have resigned their positions from low-paying and insecure jobs, calling it the Great Resignation. We have, and this is the lead-in into Olga, we have the substantial government debt from stimulus spending with a federal election due by May next year, which is most likely going to happen in March 22. So there's a lot of issues for everybody to consider, but leading into what's been recently happening and how does the tax office go about collecting $60 billion of known tax debt? That is the question. And so I'm going to throw over to David to commence the discussion with Olga. And everybody, please, if you've got any questions, use the Q&A portion of the Zoom facility, and we'll get to your questions either during this chat, or during our chat, or at the end of the discussion. So, David, thanks for the opportunity of the intro, and over to you.
All right, thanks. So what we're really trying to cover is around what are the ATO doing about previous debt. What are they doing now, and what are they going to do in the future? Obviously, all around this kind of COVID nightmare, basically. So Olga, I guess the first question is, what have we actually seen from the ATO and changes in their, I guess, behaviour during COVID?
Thanks, David. Thank you for having me today as well.
Welcome.
There's a couple of really interesting things that have been going on and that are going on with the ATO, and how we and how commercial business people and advisors look at debt, and how the ATO consider debt is a little bit different. So in the ATO, what they've actually done is they haven't paused the debt, they've paused the recovery action. And so that's something I think that we need to look at, and something that needs to be focused on. So prior to COVID, you guys especially, and I'm sure a lot of people that are watching this, were well aware of the different steps and the different recovery action that the ATO would take. Now, that included firmer action warning letters. So if we've got accountants on here, they're your orange letters, your blue letters. You'd have telephone calls, you'd have garnishee notices, you'd have wind-up actions, you'd have bankruptcies. When COVID initially hit, what the ATO did is they paused all recovery action. So the debts haven't gone away. And that's what I have been, and a lot of people have been going on about the whole time, is the debt hasn't disappeared. So whatever the COVID, or the pre-COVID or current COVID debt was, it's still there. It was the recovery action that was being paused. And the entire process and the entire time, what the ATO was saying is the key is engagement. You need to tell us what's been going on, why it's been going on, and why you can't pay for now. What they've actually done is, in a way, they've classified the current debt in a couple of different ways. Super debt is exactly the same. Super debt hasn't changed. There was even recovery action on super debt during COVID. They've also considered debt pre-COVID debt and COVID debt. Now, in some instances, that's quite semantics, because we've got some clients that had debt that had been incurred just prior to COVID, but because of COVID, they were unable to pay that debt. And we'll go through what the ATO are doing now, because they're back recovering, but they now consider all of that as pre-COVID debt. And so we need to be really careful with these sort of semantics. So during the COVID period, we saw a pause in recovery action, but no debt was forgiven and debt didn't disappear. In some cases, if people were in payment plans, they were on interest free. However, a number of people, if they weren't in payment plans, at different points of time may have still incurred interest on their debt during COVID.
Okay, so when are they? Awesome. So just on the date of pre-COVID versus COVID, so when are we talking? And are they looking at the debt kind of and the recovery of it completely differently between that pre-COVID and COVID part?
So in a way, so what they're now saying though is, if we sort of move forward a little bit, is that COVID is not a blanket excuse. So during COVID, you could they were putting indicators or flags on a file and saying you're COVID affected, you've got more time to pay the debt. Whereas what they're saying, and that pause was put on for a lot of people. However, what they're saying now is, yes, we understand, and they've classified COVID as a disaster, as they do a bushfire. So we understand that you have been affected. However, you now need to explain to us how and why, what the period was, what the effect was, and make an application for a payment plan. It's not just enough to do a little bit of a song and dance and say COVID affected, that end.
Right, okay. And you're seeing that a lot of companies aren't even lodging their returns, etc. Have the ATO accepted that, or is it something still that they're going to be chasing?
100% they're chasing. So with and you guys are probably better to talk about all of the government stimulus, but it was interesting to note that during all the time where the government was handing out cash and there was a lot of stimulus, it was based upon lodgements. So if your business hadn't actually lodged, you weren't entitled to JobKeeper and a whole heap of other raft of support measures. So the ATO the whole way through have been extremely focused on lodgements. Even if you weren't able to pay, their message was you need to lodge. Now I've actually spent half of last week on the phone receiving inbound chasing calls from the ATO about outstanding lodgements and outstanding debt. So they're back in what we would call, and what they're even calling, and the media are calling, active recovery, and they're chasing both those lodgements and chasing the debt now as well.
Right, okay. And is there a kind of amount of debt that the ATO won't chase? So if the company's, got a debt of, let's say, $100,000, is the ATO going, oh, well, that's, we won't chase that? Is there a limit?
So I'm not sure whether there's a limit now. Pre-COVID, and I'm assuming that it will be the same moving forward, there are different factors that the ATO will take into consideration: compliance, super, amount, lodgements, and there's not necessarily one specific factor that the ATO won't chase. They're more focused on getting that compliance regime and getting everyone back into what they would call a position of compliance, which is both lodgements, either paid in full or a payment plan. So I can't imagine, we see a lot of people at the moment that think because they haven't been getting calls, or because they haven't been getting letters, or there's been no enforcement action, that they're home and hose. But the biggest message is that debt hasn't gone away. It's still there. And the ATO, unless there's an insolvency event, which is where you guys come in, these debts don't disappear.
Okay, because I talk to a fair amount of directors in my job, and one of the kind of almost it's like a rumor, oh, the ATO will accept payment plans, but you've got to pay 50% up front, etc., which, I don't know where some of these guys get this information from, but yeah. So what kind of can you do to, what do you need to do to actually get a payment plan, and what is the ATO's policy on payment plans at the moment?
So the way we work is a little bit different. So we only deal with the debt area. So we're very different to accountants. So accountants will deal with the compliance space. I often joke that I don't even lodge my own BAS. Not quite sure how to do that. I'm sure if I tried, I could. We just deal with the debt end. So because we're dealing with the debt team, and our applications are a little bit different. So if the ATO is calling you, they have things that they prefer and specific ways that what they want. However, when we're doing the applications proactively, where we're getting on the front foot, we would never offer up 50%. There's what's called legal practice notes of the ATO, and they are a little bit boring, but we have the pleasure of reading them all. And so that sets out what the ATO require for payment plans, what their parameters are for the payment plans, and also what their parameters are for the remission of interest and penalties, which is a lot of the work we do. So it's making sure that we meet those parameters and dealing with the people that understand those parameters instead of the ATO thrusting upon clients what their preference is. And I think there's a lot of fear around that, and you might have heard or seen that too, especially with directors. There's been so much pressure on small businesses, even medium and large businesses, in the last 12, 18 months, almost coming up to 2 years. And the fear around the amount of debt and the amount of ATO debt because of this deferral. So they deferred 1 month or 1 quarter, then they pushed it out maybe 2 quarters. 2 quarters in normal times you can sort of come back with. 3 or 4 quarters is a lot of money to find immediately. Even half of that is a lot of money to find. So often when we talk to people, there's this huge fear of how am I going to find 50% or how am I going to pay the whole amount? But when you're dealing with the practice note requirements and detailed applications that are answering what the ATO want to hear, there's a number of different ways to cut the pie to get people into affordable payment plans that meet their cash flow rather than what's necessarily being demanded by the ATO.
Can I just jump in there as well? I think it's, Olga, it's important to remind the participants today that the principal debt doesn't go away. Where there's wriggle room, my term, is in relation to general interest charge and penalties. That's where you get some sort of
absolutely,
as you say, remission. So the principal debt always remains the same.
Yeah.
So I think it's important to remind everybody that's the case.
Even COVID debt, and that's what we've been saying the whole time, it's been deferred, it hasn't disappeared, and it won't disappear. Again, unless you guys are involved and there's an active insolvency, and then there's a whole heap of qualifiers, that's probably a discussion for you for another day, that core debt doesn't disappear. And I often, probably once a fortnight, I'll have someone call me and say, well, I was talking to this bloke down the pub, and he told me that he was able to get rid of the core debt. Core debt doesn't go. So there are very specific applications and parameters for the interest and penalties to be remitted. And what can happen over time is if you've had lumpy compliance, so you paid on time, didn't pay on time, paid on time, didn't pay on time, that general interest adds up over the period of time. And one of the things that we do is actually go back and look at how much that interest and penalties are all the way back to the last zero balance. So one of the things we were actually doing to some clients during COVID, we had a security company client that had lumpy compliance. They had finally got back being compliant. They were a security company in Melbourne and happened to get a government contract for hotels during COVID. So they got back on their feet. But because of this lumpy compliance, we went back and had a look, and they had 86,000 of old interest and penalties that they had paid over the last 6 years. And we were able to do about a 12-page written submission and was successful in getting all of those interest and penalties remitted. So they got a credit. That credit got used towards their next lot of core debt. So there's a lot of situations like that. There's a lot of situations where we see the interest and penalties is more than half of the core debt. So I think when you're talking down the pub, sometimes people just go, oh, well, it all disappeared, so they must have written it off. The other thing I get asked a lot is, will the ATO do a deal? ATO, they don't do a deal. they're not like your normal commercial creditor. So they're not like a commercial creditor that we're all used to working with. If you guys, again, if it's an insolvency event and there's creditors petitions and meetings and other things, that's a different story. But if I ring the ATO up and say, look, my client owes you $100, if he pays 50, can you just get rid of the rest? That's not how they work. There's very specific parameters, again, these legal practice notes, of what they're allowed to take into consideration and what they're not. So it needs to be proposals around a payment application, a payment plan application, and a proposal around a remission application. And there are very specific processes to consider both of those applications and not just, will you do a deal?
So if a company's deferred debt for, let's say, the last 12 months, I mean, how, how's the ATO reacting to that? If you're going to them saying, okay, we want a payment plan for the deferred debt, plus we've obviously got to pay the debt that's coming on each quarter or whatever, how flexible are they being with regards to payment plans going forward?
So the ATO's key message at the moment is engagement. So they want you to approach them. They're now approaching you as well, but they want you in payment plans. The answer to how flexible or how easy is what's been happening over the last 2 years. So they look more favourably upon you if you had contacted them and asked for deferrals, if you had told them you were COVID affected. If not, now is absolutely the time to get in contact with them. And an application, like I said, just doing a little dance and saying we were COVID affected is not enough. And information needs to be given as to how and why and what's going to be done to pay the debt and to get them into a payment plan that's within the ATO's parameters. But that's also, I think, a message moving forward, because if we fast forward, well, I'm already seeing it now, but even if we fast forward 2 months' time, the ATO have specifically said, which might make you guys happy in a way, that there will be formal recovery action taken and happening prior to the end of this financial year. So if nothing is done and the debt is continued to be ignored, there will be wind-ups and garnishee notices. So the key is that to get into payment plans now and to have that engagement and to tell them what's been going on, and they are receptive to that, especially if that's been the story the whole way through.
Well, that's good. Can I jump in there? That's really good news for liquidators.
Sorry. I thought that might make you a bit happy.
Dean's sort of mentioning in self-interest. But look, we'd actually had a discussion at board level at Mackay Goodwin about when we thought this would start to happen. We actually thought the trigger would be the federal election next year. So, which I think is probably, like, it's due by May, but certainly is probably going to be in March. So you think that, but you think now, Olga, is the time they're start pressing the collection button? So
when the ATO debt collection area calls me, it comes up as a private number. So last Thursday and Friday, I had 10 private number calls on each day. Now that's a huge amount of inbound calls chasing old debt, old clients, old debt that hadn't been paid. Their entire message is that they are back in that engagement in enforcement action mode. This is just my belief, but the government has specifically said that the support measures are stopping in a number of different areas, in a number of different ways when we hit 80% double vaxxed. I'm not sure about the stats at the moment with the whole of Australia, whether the whole of Australia's got there. But if we focus on Melbourne and Sydney, or New South Wales and Victoria, we're there. So if you consider the deferral of debt a support measure, which I think it is for all businesses, it also flows that with your JobKeeper and your other government support measures, that deferral of debt is also stopping. So I know there's a lot of speculation around this election date, but I don't know whether the ATO are actually going to be waiting for that. We're already seeing director penalty notices being issued. we're also seeing the ATO taking quite a harsh approach in areas of what they call significant debt management. So larger companies, larger debt, private wealth debt, again, individuals with larger debt, managing companies with larger debt. And they're already asking now, why didn't anyone contact us about COVID? Why has it taken so long? And why haven't you done anything? And these are the next formal action steps that we may be taking. So a long answer to your question is, I think absolutely now is the time to be doing something about it, and that there are options other than ignoring and paying in full, because I have absolutely no doubt, whether we wait for an election or not, we're going to see ATO recovery action resume. The other thing that's been all through the media that you've probably seen, and different people have done releases, is that the ATO now have the power, and new legislation sort of snuck in April, while we're all worried about whether or not the world would end, that they can report companies to credit reporting agencies if they've got debt of more than 100,000. Yes. Now, we're already seeing warning letters about that. So they're basically saying and the way to stop that is engagement. So there are ways to stop it, but we're seeing that cycle of the enforcement and the recovery already starting.
Okay. How do you find with your clients the idea of deferment? Insofar as sometimes it seems a bit lost, like some people that I speak to, like try to get the message across, you still owe the money, and whether that's to tax or to your landlord or to whatever. So it seems to me that the key issue here is about serviceability going forward of effectively of deferred debt that's been incurred over the last 12 to 18 months.
Yeah.
Is that the key issue that our participants today probably have, key message we have to get across to our participants today for their
100%. I think deferment now is scary. So I understand the position. I'm a business owner too. I understand the position that everybody was in for almost 2 years now. But now is the time to do something. And I don't believe the ATO are going to be willing to still have the kick the can down the road mindset. It's now is the time as we open up. And there's even again been, I was listening to the director of debt 2 weeks ago at the ATO, and they specifically said, as regions open up, we will be actively collecting, which means to me that deferment is not really any longer the action. It's getting into exactly what you said, Mitch, though, affordable payment plans. So I'm not talking about payment plans that are pie in the sky that you cannot afford and don't match cash flow. I'm talking about very well specifically bespoke tailored payment plans that meet a company's cash flow to support them moving out of this without continual debt on top of each other.
I've just got two things. One, Mitch, there's just a couple of comments that people are struggling to hear you. So if you can
I beg your pardon. All right.
Yeah, and then I got one of the questions from the audience, and it's something, again, when I'm talking to directors, I'm hearing a bit of, is that quite a few companies are being struck off or deregistered with ASIC. And, you know, the director's going, okay, well, I'm done now. I'll walk away, which of course is not correct. But do we know anything around what the ATO is doing there? Because there seem to be quite a lot of companies being struck off, and yet there's still all this outstanding tax debt. So do we know anything around that?
So I haven't seen that start to flow through yet, but I can only assume that what happened in relation to director liabilities pre-COVID will continue to happen. So there's a number of situations, as you guys would know, where directors are personally liable for different debt, even if the company is insolvent. That depending on when the DPNs were issued and lodgements and when the debt was incurred, a director can be liable now, which is new for GST, for PAYG, and for super. So just by the company going into liquidation or being struck off doesn't mean that the debt will disappear. The other fun thing that's happening at the moment is when the ATO are issuing DPNs in a number of circumstances, they're automatically going into people's MyGov account and they're not seeing them.
Right.
So accountants are not seeing them and individuals are not seeing them. So it's not unless you have another reason to pop into your MyGov, whatever that might be, or that other defaults are coming up, but we're seeing DPNs in there. It's not in the media and it's not being publicised, but we are seeing clients with DPNs now. So that the effect on a director's personal liability, I think, is going to be just as big as company liability. And it's a tool that we have seen in the past the ATO using, and them basically saying they're going to be using all those tools again.
Just on DPNs, has that been a significant increase?
At the moment?
Yeah, so you're saying that you've seen some DPNs, but has that been a lot you've seen coming through, or just a trickle? Or
so at the moment it's just a trickle, but it's in relation to significant debt management. So that's in relation to the larger debts and also the older debts. So pre-COVID debts. The interesting thing and a factor that's always, I think, really interesting is how bureaucratic the ATO are. My background is a commercial litigator. So I was a commercial litigator for nearly 20 years. But the way the ATO operate is, sometimes I tell clients it's a little bit like a choose your own adventure. So there's tick boxes and you have to get the right column, the right tick boxes and to go the right way down. And that's often how they'll deal with debt. It's following through a process, and part of that process might be issuing a director's penalty notice. The other really frustrating thing, I think, for a lot of clients at the moment around that bureaucracy is we all know that if you had a debt in 2018 or 2019, that's a pre-COVID debt. However, if COVID then hits in 2020 and you were hoping to catch up and get on top of your 2019 debt, it absolutely floored you. So the impact of COVID actually affected you paying the debt. However, it's now considered as a pre-COVID debt.
Right, okay.
Olga, can I just ask there, and I'll speak directly into the microphone for those having trouble hearing me, but what you've just described is just basically, we hit 80%, the government views that as we're back to normal and press the collection button. Do you think there's any leeway here if there's another lockdown? For example, if COVID version E, D, F, whatever comes out, do you think there's going to be, you know, a return to, okay, COVID is back, it's a different, or whatever the reason is? Yeah. Do you think there's flexibility there? So
the ATO's key message is engagement. We'll work with you if you work with us. So I think that there is always the possibility, as there is with payment plans and even remission of interest and penalties, if you tailor what you need from them correctly and you do it in the right way, to be able to get their support. I think it's the same as when they have specifically classified COVID, as I mentioned, as a disaster. So if you go onto the ATO's website, bushfires, there's postcodes that they put towards disasters. So COVID now sits as one of those. So I think the answer would be yes. If there was more lockdowns, or if there was another version, then there would be the chance to work with the ATO potentially for another deferral. Will it make the debt disappear? No. The debt's never going to actually disappear. But if you continue to bury your head in the sand and do absolutely nothing, do I think that they will leave you alone? No.
Okay, thank you.
I've got a question from the audience here. It's a bit of a prickly one, this, with regards to JobKeeper.
I might not be able to answer it.
Yeah, it's a tricky one. So if a company has been paid JobKeeper and maybe then discovered that it maybe shouldn't have been, have you seen any examples of that as yet? And if so, how are the ATO reacting to that? I.e., are they saying, "Oh well, pay us back on a payment plan," or "We want the money now," or what?
So everyone has different. Well, not everyone, but companies, for example, have different debt accounts. So certain debt goes into what's called an integrated client account. A certain debt goes into your income tax account. I've seen 2 examples of people that got JobKeeper that shouldn't, and they've created a separate ledger on the company's account. And for those overpayments, they go into another account. The same, if a matter goes legal and you get judgment against you, there's a legal fees or a legal account. So what I have seen is the overpayment of JobKeeper goes on the record, I suppose, into a separate account. And yes, it is possible to get payment plans for the repayment of that debt, but it's the same as any ATO debt. If you're not in a current payment plan, you're not in a position of compliance.
Right. Okay. So the key message here is get on the front foot, communicate, or get your advisor to communicate with the ATO. It's no good just sitting there going, "Oh, no one's contacted me, I'm fine." Yeah. Get involved. Okay.
Yeah.
Cool. I got another question here. There's been talk about the ATO entering into 7-year repayment terms. Is this true?
I haven't heard anything like that, and obviously we haven't tried, but we're not seeing any change in the terms that they were doing pre-COVID.
Right.
So
okay.
I think that sort of sounds
huge,
like.
Yeah, I can't imagine that at all.
That sounds like one of the pub conversations, I think.
Yeah, I actually think what would happen if you tried to do that is the ATO would say this company sounds like it's no longer viable. You need to prove viability.
Okay. I don't think I have any more specific questions at the moment. I think we don't have any more on the Q&A. Olga, do you want to just kind of summarize what we should all be thinking about on this? Or
yeah, there's a couple more, I think, in the Q&A. Can you see those?
I've just had one come through.
Yeah,
saying,
we just had one coming through. Yeah, sorry, you go for it, Mitch.
Oh no, thanks, David. Is the ATO writing off DPNs is the question.
I haven't seen that at all. I've seen them enter into payment plans for DPNs in the situations I've seen, but no, I haven't seen any actual DPNs being written off, unless obviously there's an insolvency event like a bankruptcy.
Bankruptcy or liquidation. Okay. Can I just ask there as well, Olga, you know, the VA DOCA regime, the rehabilitation of the company, have you seen any theme developing about ATO support for DOCAs of recent date, especially in COVID affected businesses?
I haven't seen that, but that's also not our specific area. So we help and we deal with companies that are still viable and that want to pay the debt. Not always happy, but are willing and able to pay the debt back, not in the insolvency space. So that wouldn't be something that I could probably accurately answer. It will be interesting, I think, to hear what you guys think if we fast forward 6 months as to where that sits and what's happening once the pressure comes back for the recovery of these debts, and you guys then have to get involved.
Okay, and that just leads into another question that's popped up, and that's can Tax Assure work with insolvency practitioners to help with DPNs if a DOCA is accepted by the creditors?
100%. So pre-COVID, we used to do that all the time. So you guys would get clients going, but I appointed you, can't you help me? You have to help me, I'm the one paying your bill. And that's where we step in and the liquidator says, I can't, but go see Tax Assure, they'll absolutely look after you. And what we do is we work with the individual whilst you're dealing with the company in relation to the DPNs. We actually had an example pre-COVID of an individual that had a Chinese restaurant. The company went into liquidation. There were outstanding DPNs. We looked after the directors, and what the ATO actually did to him is they put garnishee notices on all of his personal bank accounts. The ANZ, in their wisdom, took the garnishee notice as a freezing order, and they froze every one of his personal bank accounts. And so we were engaged to assist with the removal of the garnishee notices and payment plans and dealing with the DPN for this particular director. So yeah, that's something that we do all the time.
Okay. That's great for us and also the attendees to know. Thank you.
Olga, I've got some more. They're coming through all over the place here. This is through the chat.
Yeah.
We could be here for hours.
Modern technology. I hope everyone's got their coffee. They might need two.
Okay, so a person had so this is just a kind of specific case study almost. A person had a company with tax debt. Now the client, presumably the director, is mentally ill. How does the ATO look at this client? Even not mentally ready to do liquidation. I guess, how does the ATO look at clients who are saying, obviously there's a big mental health issue across the country and the world. How are they empathizing with that?
So mental health is a factor that's taken into consideration, one of the many factors in relation to the legal practice notes for looking at the remission of interest and penalties, and also potentially why the debt hasn't been paid, and time and understanding a particular position. However, that being said, I have not seen that to be used as enough for an entire debt to be written off. And moving forward, if there was no proposals and it was just deferrals, I can't imagine that would be enough to stop action forever. There would need to be some proactive action, something done. But they're certainly the sorts of cases that we work on all the time.
Okay, that's great. We have also one fairly technical sort of question, and maybe outside your expertise, but I'll just mention it in any event. And it's from an anonymous attendee. Okay, the first thing, does the ATO communicate with FEG, Fair Entitlements Guarantee? So
I'm not sure.
Okay, well, look, look, from my perspective, I think they do. I think it's safe to assume that all government agencies communicate with all other agencies. Then it goes into a position of does FEG support trade-on positions by administrators and liquidators using funds, which is circulating assets? So just want to the anonymous attendee, I think that's actually outside the scope of today's discussion, but my name is Mitch Ball. My number's on the website. I'd be more than happy to have the conversation offline. So look, but thank you for the question in any event.
Okay, I do think that's. I don't think there's any more questions coming through at the moment. So,
and that's the same too, Mitch, with us. Like we're always happy if people want to give us a call and say, look, I've got this client or I've got this situation. I might have tried this, but I got nowhere. With your contacts and your expertise and you dealing with these people all day, every way, do you think there's another tact that you could do, or do you think there's something else that might work, or are you happy to have a chat to the client? And that's what we do all the time. So we're more than happy to talk through situations. Often we get wheeled in to clean things up. It's absolutely no reflection, especially at the moment on accountants. There's so much pressure and so much extra work that's been on accountants. The last thing you want to have to do is deal with debt day in, day out. And these applications that we do are very detailed. Like I said, they're around 12 pages long. It's what we do all day, every day. So we work with accountants, with insolvency practitioners. So more than happy to sort of come in as the cleaner, clean it up a bit, and then we disappear. You don't have to talk to us again.
All right, good stuff. Well, I think that's really it. We've done 40 minutes, so I think people are probably going off to lunch or work for the afternoon. So Mitch, thank you. Olga, massive thanks for your insights. And thank you everyone who attended today, and have a good rest of your day.
Thanks for having me today.
Thanks very much, everybody.
Thank you.
Okay.
Bye.
Good afternoon.